Welcome to our market recap. Welcome to our market recap. The past 2 days have seen significant volatility across U.S. markets, primarily driven by escalating geopolitical tensions in the Middle East following U.S.-Israel military strikes on Iran and subsequent Iranian retaliation. While global equity markets generally saw declines, U.S. stocks demonstrated remarkable resilience, recovering from steep early losses on Monday. Stock index moves and general stock market news. On Monday, all 3 major U.S. indices initially plunged over 1% at the open, with the Dow Jones Industrial Average dropping nearly 600 points, the S&P 500 falling as much as 1.2%, and the Nasdaq Composite down 1.6%. However, investors quickly bought the dip, leading to a significant rebound. The S&P 500 ultimately closed with a marginal gain of less than 0.1%, adding 2.74 points to 6,881.62. The Nasdaq Composite rose 0.4%, or 80.65 points, to 22,748.86, largely buoyed by big tech stocks. In contrast, the Dow Jones Industrial Average dipped 0.1%, or 73.14 points, to 48,904.78, reflecting the pressure on traditional industrial and banking sectors. This recovery suggests that while the market initially reacted with fear, many investors remain conditioned to see geopolitical shocks as short-term events, with fundamentals eventually regaining focus. As Tuesday morning progresses, U.S. stock futures are pointing lower, with E-mini S&P 500 contracts down approximately 1.5%, Nasdaq 100 futures off nearly 2%, and Russell 2000 futures lower by about 2.6%. This renewed pressure indicates ongoing caution as the conflict continues with no clear end in sight. Public company news. Nvidia saw its stock climb 2.9% on Monday, acting as the strongest single force pushing the S&P 500 higher. This highlights the continued investor confidence in AI and high-growth tech assets, even amidst geopolitical uncertainty. Palantir Technologies jumped 5.8%, making it one of the biggest gainers in the S&P 500. Its software, which aids global defense agencies, benefited from the increased demand for military equipment and services. Marathon Petroleum rose 5.9%, and ExxonMobil climbed 1.1% as oil companies benefited directly from the surging crude prices triggered by the Middle East conflict. This is a classic war premium play where energy producers outperform. Northrop Grumman strengthened by 5.9%, and RTX rallied 4.7%. These defense contractors saw significant boosts on expectations of increased military demand following the escalating conflict. Conversely, D.R. Horton lost 3.7%, and Builder FirstSource sank 4.7% as housing industry stocks struggled. This downturn is likely linked to rising treasury yields, which typically translate into more expensive mortgage rates. Norwegian Cruise Line Holdings fell 11.9% after reporting weaker than expected revenue despite a stronger profit and lowering its profit forecast for the upcoming fiscal year. Airline stocks like United and American also retreated due to worries over higher fuel costs and potential disruptions to travel demand. Macroeconomy and politics. The primary macroeconomic concern stemming from the conflict is the potential for increased inflation due to soaring oil prices. U.S. President Donald Trump stated the war is expected to last 4 to 5 weeks, but warned it could go far longer than that, creating significant uncertainty for consumer prices and economic stability. While some analysts believe the economic impact could be modest, given the U.S. has become a net oil exporter, prolonged disruption would undoubtedly fuel inflationary pressures. The U.S. Supreme Court's recent ruling on February 20, 2026, finding that the president lacks the legal authority to impose many existing tariffs, has added to market confusion. President Trump initially announced a new temporary global tariff of 10%, later stating it would increase to 15%, but the reason for the initial lower rate remains unexplained, keeping trade policy highly unpredictable. Commodities and bonds and crypto. Oil prices have seen a dramatic surge, with benchmark U.S. crude rising 6.3% to settle at $71.23 per barrel, and Brent crude climbing 6.7% to $77.74 per barrel on Monday. On Tuesday, WTI crude oil futures shot up to about $75.15 per barrel, and Brent crude soared 11% towards $79 per barrel, fueled by Iranian claims of a Strait of Hormuz closure. This critical choke point handles around 20% of global oil consumption, and any disruption could lead to an energy shock and significant inflation. Natural gas prices have also leaped, with European and Asian benchmarks up 40 to 50% after a major LNG supplier, Qatar Energy, halted production due to drone strikes. In the bond market, the yield on the 10-year Treasury note has risen to 4.04% from 3.97% late Friday, and then to 4.1% on Tuesday, marking its highest level since mid-February. This is counterintuitive to the typical safe haven flow into bonds during times of geopolitical stress, suggesting that inflation concerns are currently outweighing demand for defensive assets. Markets are now pushing back expectations for the Federal Reserve's next rate cut to September from earlier forecasts of July, with 2 25 basis point reductions still priced in for 2026. Cryptocurrency markets have also experienced volatility. Bitcoin initially fell to near $63,000 after news of the attacks on Saturday, but then rebounded more than 5% to over $69,000 on Monday, even briefly touching $70,000 on Tuesday. This rally saw the CoinDesk 20 index rise around 5%, with Ethereum up about 6% and XRP about 3%. This temporary safe haven narrative for crypto during geopolitical crises seems to be gaining traction, contrasting with the broader stock market's flat performance over the past month. However, Bitcoin faces significant resistance at the $70,000 level, and a break below $67,400 could lead to further dips. Gold has climbed, with spot prices rising 1.2% on Monday as investors sought safer assets. Gold futures jumped 1% and briefly touched $5,400 per ounce on Monday, rising to $5,270 per ounce on Tuesday, and is near historic highs. Silver prices, however, fell 6.5% on Tuesday after hitting a 4-week high on Monday. Forward-looking insights. The market will be closely watching for further developments in the Middle East conflict, particularly any confirmed disruptions to shipping through the Strait of Hormuz. Economically, Friday's U.S. jobs report is a key event, with Wall Street economists expecting payrolls to rise by 60,000, following a stronger-than-expected January. This data will provide crucial insights into the labor market's trajectory and influence the Federal Reserve's future interest rate decisions. The current elevated 10-year Treasury yield, hovering around 4.1%, will keep borrowing costs elevated and continue to be a factor for businesses and households. Analysts suggest the S&P 500 could face a key test at the 200-hour moving average, 6874, with a close above potentially pushing it toward 7,000, while a break below could see a test of 6760. However, fundamental developments surrounding the conflict, inflation, and Fed policy remain paramount.